This video is going to serve two purposes. So first and main purpose is to just show you how I do my back testing on TradingVue, and also to show you guys why I have so much confidence in the strategy that I've been doing, why I let some profits go and I don't secure the most I could on that move. We'll go over all of that in this back testing. So the plan is we're going to do a week's worth of back testing, and it's fairly quick with this strategy because I only have 2 opportunities a day anyways, and it's very easy to spot a setup if it's there and then determine if it's going to be a winner or a loser and then move on to the next one. So first things first is I have a Google Drive Excel sheet where, for my purposes, since I'm only doing 2 trades a day, I have 2 rows for each day, an AM session and a PM session. I like to keep track of the risk that I'm doing on each trade, and then the profit and loss in points, and how long the trade took in minutes. And then if there's any notes I need to write down about the trade, if there was something a little off about it. For instance, one of my rules is in my morning trade, I wait until 10 a.m. to start looking for a trade. So I take the trade and I have a profit target, but if it doesn't hit that profit target and it doesn't hit a stop, if it runs to noon Eastern time, lunchtime, then I have to kill it. That's just one of my rules. So if something like that happens, I write that down. Then it's easy for me to go back and look and be like, oh, this is how many times a morning trade never hit a profit target or a stop, and I had to kill it at noon. And then I might mark down, like, had I killed it a little earlier, maybe I could have had X amount of points or whatever. So just things like that. So if you guys do something like this, think of any other metrics that you may want to look back on. It's also been highly recommended of me to take screenshots of each trade or each session that I do, which I have not done, but I need to start doing, because then if you have an idea of what if I change this a little bit in my back testing, how would my results change? And you don't want to have to go back and retest. If you had screenshots, it would be super easy to just go back and log. Oh, if I took a 1-to-2 like ratio on every trade, you can mark that down real quick instead of having to go back through this whole entire process. So we're here on TradingVue. I'm on the continuous NASDAQ futures contract. It's just easier to just do the continuous one when you back test. So when you get to that rollover point, you're not dealing with like low volume and stuff like that. First thing I do is squeeze the this axis over here so you can't really tell what happened. And then we're going to scroll back until we see July 10th down here on the bottom. And I'm on the 2-minute chart. I just test one time frame at a time. That's why I try to stay on my 2-minute when I'm trading, because that's the time frame that I did all this back testing on. So if I change one variable, it's going to change the results moving forward. So you'll see down here, we're at Monday, July 10th, and I start trading at 10 a.m. So we can just go ahead and fast forward right to before 10 a.m. There's no need to go earlier. So you'll hit the replay up here, and then down here you'll see, and I'm going to start. You could always start like right before market open if you want, but when I first start, I just go right before 10. You can double click over here. You can hit Alt R, but double clicking will just reset your chart view. And then I like these in multiples of 10 on the side. And for my strategy for the morning session, we look at the highs and the lows between 2 a.m. and 5 a.m. So here's 5 a.m. That's about a high right there. And 2 a.m. starts here, and that was the low right there. So we have our session. We have the buy side and sell side for the London session between 2 and 5 a.m. I have that on 10 times the speed. So when you hit play, it's going to start printing candles. And This isn't like Tradervue or NinjaTrader where you see the individual moves within the candle. TradingView will just print a candle on the board. When you do forward, it's just going one next candle, the next candle, the next candle. So depending on your time frame, mine's going to print a 2-minute candle, 2-minute candle, 2-minute candle. So you can't really see what's going on within the candle, but my strategy, and I'm sure lots of people's strategies, doesn't matter what happened inside the candle. But you also need to remember that when you do your live testing or forward testing, or you're actually trading compared to here, is that you're not being subjected to those movements within a candle. And as you know, a candle can look a lot different between the times or during like the 2-minute versus when the candle closes. For instance, like this candle right here at one point was a full red candle, and then it came up and closed green. So you got to keep that in mind. Luckily, my strategy, I don't care what the candle's doing because I'm looking for a particular setup. So we'll go ahead and put a mark here at 10. So this is when we can start trading. And you can just click this forward button to go ahead and just print the next candle, and that's how you see how it throws the candle on there. And for this particular strategy, we're waiting for buy side to get taken out or sell side to get taken out, and then for the fair value gap. So if buy side and sell side is taken out before 10, then there's no trade and we can just skip to the afternoon session. Monday, we had buy side taken out in the first 30 minutes. We came down, we didn't take out sell side, and now we're coming back up. And we can just hit play and go pretty quickly because I'm just looking for a fair value gap. It's really easy to spot. So we can just click, 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 and look for a fair value gap. So we have one up here. We also had one back here, and I got a little ahead of myself. So, and it's because I'm trying to think about recording and all that stuff. Let me just go ahead and put, this first day is going to be kind of slow compared to when we do the rest of the week. However, we have a fair value gap, a valid fair value, a bearish fair value gap above buy side, and sell side has not been taken out. I choose the first valid fair value gap that makes sense for the context that I'm looking at. Took out buy side, we have a bearish fair value gap up here. We can get in on that one. So we're gonna hit the short position. Okay, another side note. Tools over here have little favorites, and whatever you favorite can go in your little favorite toolbox that you can move around, and that can be toggled with the star down here. So the stuff you use the most often, you can favorite them and put them in this little toolbox and move that around. So we're gonna do a short position up here, which was the retest after 10. We'll throw that on the board, on the chart, which would be around there. The stop would be at the first swing that started the fair value gap. So we would, over on my data sheet, we'd put 34 points that we're risking. We got in, it'd be, I mean, I probably would have got in, we'll just say on this candle, it doesn't really matter. And then I'm going to stretch this out to noon. And we're targeting, I target roughly the sell side, so we'll just put it at 90. And then we hit play. And we see what happens. So, up until noon, we had not gotten hit. As you see, the next 2 minutes we did get hit. My rule is if it doesn't get hit by noon, we kill it at noon. So we're gonna say that we would have profited $78 or 78 points. Sorry. All right, 78. And the amount of minutes, we'll say we got in at 10:20, exited at noon. We'll just say an hour and a half, and the notes are killed at noon. That's all we gotta do. We remove everything. real quick on this day, because this was the day that I skipped, I thought this move invalidated my trade for the day, that we already came down to my target, but we never took out sell side, and my rule is if there's liquidity available, we can still take a trade. So this was the first opportunity. The next opportunity was right here, this fair value gap. So you could put a short right there. We would have been risking more, 41 points, but we would have gotten, kind of messing up, but we'll put that up, 65 points on that move. And then, so there's that fair value gap we could have entered on. And then there's also this one, which obviously was a lot smaller. It's still risking like 40 points. But the first valid fair value gap was the one created at market open, the first 30 minutes, and when we retest it around 10:20, 10:30-ish in this area, and then we'd have to write all that down. So we're going to remove the drawings. We're going to create our 12 and 1 p.m. sessions. Play this through the lunch session. Stop it right after, mark out our highs and lows. So that's the highest it ever went to, that's the lowest it ever went to. And now we wait for buy side or sell side to get taken out first. So we came up, took that out, and now we start looking for a fair value gap, which I believe we can take that one. So I'm gonna just put a short up there. It's close, because that's what I've kind of started learning this week, is like I want to start getting in when the fair value gap is created. So let's just say we got in down on that one. So risking, risking 25 points, and then targeting sell side, and we stretch this out to 4 p.m. So we got hit right there. So minus 25 for the P&L. That took 130 to 220, so about an hour. There's nothing else to write down for that. And we can play it through and just see what happened the rest of the day, if just for our sanity. But nothing. So I'm gonna remove the drawings, and then we just hit play and go to Tuesday 7-11 right before 10 a.m. And while this is playing, we can try to mark out the highs and lows for the London morning session between 2 and 5 a.m., which is coming up. So we're just playing at 10 times speed. As soon as we hit 5 a.m., we'll pause it real quick and mark out those zones. So between 2 and 5, that's the highest, that's the low. I don't typically mark this out, but just showing you guys, it'll be easier. Okay, so between 9:30 and 10, liquidity is still available up here. So now it's 10. So now we start looking for a bullish fair value gap. There's one. There's one. And this is the day that I'm not doing this just because like I know what happened that day, but this was the day that I realized once a fair value gap is created, that's when I want to get in. This one was created and then we opened up here. So we're gonna go long right on that candle. Stop beneath the swing, 40 points. Targeting up here. Stretch it out to noon. So we're risking 40. And then we hit play. Hit our target right before noon. We had to withstand this, but look, we wait and we hit it. 81 points. That was another hour-and-a-half trade. Remove the drawings. Press play through lunch. So 12 to 1. There's the high. There's the low. Wait for something to get taken out. The high up there or below. So we had a little bit right there. I don't think that's not, I want more than that to be taken out. That, like, I want it to be traded through, not just stabbed a little bit. I learned that like a week ago. We have a fair value gap right here, and I kind of treat like this whole thing kind of like a fair value gap, so we'll just jump in on this guy. Targeting 240, stop there, 24 points we're risking. Stretch this out to 4 and see what gets hit first. There, we hit our target. 59. And it took 240 to 340, 1 hour. Remove drawings and press play to the next day. These 2 trades, well, all 3 of these were over an hour. This is why I've learned to have so much patience. Just when I did backtesting on this strategy, the next day I'm like, I have to wait. I have to just let these play out. Like, if I want to get the results that I see in my backtesting, I have to just let them play out. And there's nothing else I can do. So 2 a.m. and 5 a.m. So that's the high, low. And it doesn't matter if liquidity is taken out in the morning session, like the early morning session. We have to wait till after 9:30 and 10. Oh, we're on too fast there. So we need to wait until 10. So we have buy side obviously taken out. So we need to wait until 10 to take a trade. And we can take a trade at 10 if there's a fair value gap already. Now we just skip forward until we see a bearish fair value gap. And these are really easy to spot live, so it's okay if I go a few clicks past. There's a little one right there. Or stop up here, so stop at 24. And this was a news day. We are targeting way down here. And stretch it out to noon. Press play. So we didn't hit our target. Our target's way down here, but at noon we could have had 106 points when we kill it at noon. Remove drawings. Go through the lunch session. Work out the high. Work out the low. Wait for one to get traded outside. That's good enough for a bearish fair value gap. So we got a little distracted, but I think we were on the afternoon session of the 12th and traded outside past 1 p.m. above buy side, looking for a bearish fair value gap. So this guy right here came back in, traded into it, stop right at that high, enter at that candle, targeting the lows, and we have to close it at 4 p.m. So risking 24. And at 4 p.m. took a loss of 9 points. 30 minutes. Again, taking screenshots and keeping a log of screenshots would be helpful, and I'm going to start doing that. That way I can look back and be like, okay, what could I have squeezed out of this trade? This trade, we could have had up to 12 points, nothing crazy. Could have jumped in earlier, maybe got a little more. I think that's what I did end up doing that day. I don't remember. But this is just testing and just seeing what the strategy can do, and then we can mold it to fit our needs. There's a couple reasons why I really like this strategy, even though I've been not necessarily doing that great on it. I think my patience has been great, but I love that it's very strict. There's a few rules, and it's very easy to spot a setup. You can't really confuse a setup for something else. It's either you have a fair value gap after liquidity is taken, or you don't. So we've got 5, that's the highest, and then is that 2 back there, the lowest. We'll play through 10 or 210. So there's 10 traded above buy side. So now we look for a bearish fair value gap. There's one. It's a little one, but it's still something. We'll throw a short in there. Stop. I'm gonna do this swing because I've been doing the first swing before the fair value gap. If we wanted to risk more, we could have put it up there, but 25, targeting the lows, and then a hard stop at noon. And so this would be a good one that we would take a screenshot. Let me play it through noon just to see. So we take a screenshot so we can be like, okay, we did lose this one. We were in quite a few points, 26. So we could have had a 1-to-1. Maybe like after we have a lot of data and a lot of screenshots, and we can look back and say, okay, do we want to focus on like 1-to-1 risk reward ratios? Do we want to focus on 1-to-2s? How profitable would those be? What's the win percentage, etc. But this was a losing trade. About an hour for 25 points. Got our lunch session, high and low, traded above. Look for a bearish fair value gap right there. Risking 12. Stopped out for 12 points. Another 30 minutes. And the last day, Friday, yesterday, which I did 2 trades, I believe, perfect entry. So we should be able to spot that same exact thing. Because I think I remember talking about that I performed exactly as the strategy needed us to, and we picked trades that we would write down on our Excel sheet. That's my goal, is to just get this to where I have like a ton of tested trades to really see what the win percentage is and what the expected profitability would be if we were taking this perfectly. But as you know, it's much harder to take trades exactly like you do in testing, but just to get an idea of what the strategy could do. So we trade above, buy side, it's 10. For a bearish fair value gap. Nothing there. There's one. I think that's the one we took actually. I'm gonna put it above this swing. So 35. Pretty sure it was a loss too. About 30 minutes. And the lunch session was the high, was the low, and now we're already below. So we look for a bullish one right there. I accidentally played through it, but again, like I said, we can play a little bit past it. I pick the very first one I see, And these are easy to spot live, so it's not like I'm seeing the market, oh, we're going up, so let's jump in. I'm just picking the first one and seeing what happens. And we definitely got stopped out there. Again, it'd be good to take screenshots to kind of, then you could go back and see. That wasn't quite a 1-to-1, so I wouldn't really want to take that anyway, take those 20 points. But risking 25, got stopped out after about an hour. And so that's it. I also have, this shows the AM trades versus the PM, so we could easily highlight them and do something with that if you wanted to. And we can see, here's the sum. This is the amount. So following the strategy perfectly for this past week, not killing trades early, letting them play out. If they go in profit but they don't hit our target, we let them play out and we kill them at noon or 4. We could have ended this week green of almost 200 points. It's not that much compared to other strategies, but to me it seems super easy. It requires patience and discipline, which I've proven I have overcome those and gained that. So now it's just a matter of waiting and executing these trades and not taking impulse trades like I did the other day, after I just said I have the discipline now. But we've gotten a lot better than what we used to do. And it's just a matter of waiting for them and then just letting them play out. And if I let them play out, it's 193 points. I also have some, if we scroll over a little more, let's go ahead and just put this right here on this sheet. So I have the rules right here. And then I have some calculations based on what this strategy would do money-wise, based on micros and based on minis. So in this past week, trading 3 micros, that's what we're doing right now, $1,100. That's quite a bit of money for only 3 micros, and it scales up from there. So almost $2,000 in 1 week for 5 micros, and then $3,000 for 8 micros. And this is where it gets interesting, the mini math. When you switch over to mini math, you're at almost $4,000 with 1 micro, 38 with 10. That's insane for 10 trades in 1 week. And then here are the my rules that I've been writing down. And yes, this was just 1 week, so that's not that much data. We had some news this week, so that's why there's some bigger numbers on this. But I have back tested this from May with some pretty strict rules, and the results are in. It's still decent. This week, sure, it was only 21 points. The next week with a holiday, 102. Week after that, 254. There was this one really caught my eye. And it didn't even hit my profit target because I wrote down that I killed it at lunch. So we were aiming for even more than 148 points. Week after that, we only took 3 trades, but 68 points there. Next week, almost 200 with holidays. Week after that, 147. Week after that, with 2 holiday sessions, 60. And then this past week, around 200, like what we just did. So since May 22nd, that's 1, 2, 3, 4, 5, 6. Wait, did I just mess that up? 1, 2, 3, 4, 5, 6, 7, 8. So 2 months of this strategy, and this is back testing. So these are like ideal entries. So like I said, and like you've seen, you're not really going to get exactly that, but close to it is good enough. So in 2 months with 3 micros, over 6K. And then the mini math, 1 mini is $21,000 in 2 months. That's what I mean when I say any profitability is good, because you can just scale that up. This is why I'm sticking with this strategy. This is why I'm not adding additional things to my charts. This is why I'm not looking at other like gaps and other zones. I'm just focusing on this London session and the afternoon session. The data is here. If I could do this, if I can do this with one mini, I don't need to change it. I don't need to be greedy and get more, because all I have to do is add another contract. Adding one extra contract now doubles that from 21 to 40. That's insane. That's ridiculous. It's crazy that much money can be taken out of the market like this. So I'm going to keep at it. This is only 2 months of data. I'm excited to see what the next month brings, especially because we're trying to be as strict as we can, doing the strategy live on our funded. So we should be pulling in some of these numbers soon as we get better at dialing in and executing these trades. So yeah, that's how to backtest. There's my strategy. That's what I'm working on. What do you guys think? Let me know. Talk to you guys in the comments. Appreciate all you guys' support, motivation, and any advice, even if I politely decline it. I still appreciate it. Thank you. Talk to you guys later. Have a great rest of your weekend.